Let's start with initial jobless claims. It's another move higher. Got to see what the revision is to last month, but we're up by 2,000. Not a whole lot, not a big change, but 231,000 jobless claims, initial jobless claims for the week ending June 25th. Now, the income and spending numbers is what everybody's been waiting for because they have the PCE inflation figures. And on a month-over-month basis, we're up 0.6, which is much higher than the 0.2 from last month. Leaves the deflator at 6.3% on a year-over-year basis, which I suppose is probably good news for the administration and for the Federal Reserve. On a month-over-month basis, core is up 0.3. That is the same as last month, and that drops, given base effects, the year-over-year number to 4.7% from 4.9%. Now, this is the kind of thing that had been expected because the base effects were involved and because we're getting a wedge now between the core rate and the headline rate because the headline rate is much more influenced by energy prices. And the problem for the Fed is that energy prices have come down significantly, but if they go back up again, they can't do anything about it. They have to sort of focus on the core to get a good idea of where inflation is. But their favorite indicator on a core basis is a little bit better. Just scrolling through the data here, and I want to point out incomes were up 0.5%, spending up 0.2, and that's after a 0.6 gain the month before, which was revised down from 0.9. So maybe taking some of the inflation out of what people had been spending. The news on income better than forecast. It's the same as last month at 0.5%. Spending on an inflation-adjusted basis down 0.4 compared to a 0.3 gain in April. So we are seeing inflation affect the spending numbers, and I would imagine there's a bit of inflation in the income numbers as well.